So this business owner in Ontario, Canada, was literally about to sign $100,000 a year insurance premium, pen in hand, ready to go. But instead, he ended up signing a $30,000 one and keeping the other $70,000 a year inside his company, where he can actually touch it whenever he wants. So same amount of money leaving his bank account every year, but a completely different outcome when it comes to taxes. So here's the backstory of this case study. He runs a commercial glazing, drafting, and engineering company doing about $600,000 in gross revenue, paying over 100K a year in taxes to the CRA. And he had no plan whatsoever to reduce that. His bank advisor never really brought him anything. And the only person who actually came to help with a proposal was an insurance agent who was pushing pretty hard for him to lock into this whole life policy at 100 grand a year. So he knew something felt off about putting every single dollar into one product, but he didn't really know what else to do. So he was about to just sign it. Then he got referred to Christian from our network at Preserve Wealth Group. And the first thing he did before even picking up the phone was look Christian up online. And he was already skeptical going in, which honestly is a good sign because the best clients for us usually are. So what happens is Christian gets on the call with him and he doesn't come in pitching a product. He starts with a proper needs analysis, which is what every advisor should do. Revenue, income streams, headcount, corporate expenses, what the business owner is actually worried about long term. And the question that changed everything was very simple. He asked him, if your shop has a slow quarter, what happens to that $100,000 commitment you were about to do? Because a whole life premium at that level is a promise you're making every single year for the rest of your life. And if you put every dollar you have into that one commitment, then if the business slows down, you're stuck. That's a really dangerous position to be in as a business owner. So the strategy that Christian put together for that business owner was two moves. First, the insurance need was actually real. He genuinely needed permanent coverage for his family. So Christian kept it, but sized it properly. So $30,000 a year into an Empire Life participating whole life policy. Guaranteed death benefit, cash value that actually builds up over time, tax efficient transfer to the family. That's about 30% of what the original agent wanted him to commit to. Their insurance is still there, it's just not consuming everything. Second, that remaining $70,000 a year, which works out to be about $5,800 a month, goes into a properly structured corporate class fund held inside his corporation. So these are corporate assets that build up over time. And the important part is that he can actually access them whenever he wants. And this is the part that actually really makes sense for business owners in Canada is that $70,000, he can increase it in a good year. He can also pause if things get tight. He can redirect it if he needs to buy equipment or cover a project that went sideways. And the policy at 30K, well, he doesn't care. It just keeps running on its own. So the corporation owns the policy. The corporation is the beneficiary. So the death benefit credits his capital dividend account, which means that when it pays out, it flows to his family 100% tax-free. And the 70K per year he's building up on the corporate side stays liquid as well, and it stays within his control. So he told Christian he moved forward because he actually understood what he was signing before he signed it. And that was the big difference. The other agent just wanted to write a big check with him. So if you're a Canadian business owner and somebody has handed you a one product proposal for everything, the question you should be asking isn't whether the product is good or bad. The question is, what happens to this commitment in a bad year? And is there a smarter way to structure this so you're protected, but you're also not locked into something that you can't flex around? And that's what we do at Preserve Wealth Group. We connect business owners with independent licensed specialists, the best in our nation, who work through this with you before you sign anything. So links below this video if you want to have a conversation with one of our advisors.